What's going to come back? How fast and where?
Well, if you take a step back, COVID has disrupted everything. So when we look at the M&A market, I look at pre-COVID, 2019. So we're sitting here today with a market that's down 20% versus 2019. And the question is, why isn't it back to those levels? And I think it's two things. One is the regulatory scrutiny on transactions, particularly large transactions, is fundamentally different than it was 5 years ago in a different administration. And if you look at large transactions, sort of mega deals, they're down 50%. Until there's either a change in administration or this administration gets to a second term, I think a lot of deals that are being actively considered are just not going to be brought to the market. So we're going to see more transactions of large scale post the election than we've seen. And I think those are in economies and industries where there's the greatest dislocation. So I would certainly put media, healthcare, finance in that bucket. I think the second thing is interest rates where they are today have frozen a lot of transactions because we clearly have a cresting of rates, but until we see rates start to come down, I think private equity firms are trying to control exits. They're being far more disciplined about selling assets. As a result of that, they need to be more disciplined about committing new capital. And I think that engine really has been stuck. And what's going to change that is either a realization that it's higher for much longer, or we're going to start to see the travel back down on rates.
So what you said has a lot of ramifications because at the beginning of the year, many investment banks said there are green shoots. There are green shoots everywhere. Those green shoots are materializing into flowers finally. But it sounds like there could be a real hold through the rest of the year.
Well, we've never subscribed to that. So the good news is there's never been 3 down years in a row in terms of global M&A volume. We've had 2. I think we're quite confident there's not going to be 3. On the other hand, that first year of recovery tends to be reasonably anemic because it's a sclerotic environment right now, and it takes a while to get the transaction flywheel going. And one of the things that is underappreciated and underestimated, Sonali, is there's a bit of FOMO out there, which is M&A is pro-cyclical. If your competitor is making a strategic move, that tends to invite a response. And if your competitor is standing still, your comfort level in standing still remains a little bit higher. So we had always thought that this year might be up 10% plus or minus. It's tracking up 3 year to date. I don't suspect it's going to get a lot better this year, but I think what we are positioned for, as I said, is if we can get past this regulatory cloud, and if we can get the direction of interest rates with greater clarity, then I think you're going to see a reasonably stuck M&A marketplace become unstuck.